Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver now.
Hey guys, Bix Weir, roadtour.com. Today is November 4th, 2023. I have been so busy working on silver stuff that I don't have enough time to put it all in. This is what happened yesterday. It's always good to see, but it's still rigged. But there's times in the silver market when you've been in it long enough. In 2021, at the beginning of the year, when there was the Wall Street bets and all that was going on, the silver squeeze was happening. The riggers trotted out two guys, Jeff Curry of Goldman Sachs, and of course Jeffrey Christian of CPM Group, to try to tamp down the market. As we all know, that's what the CFTC calls it. The head of the CFTC said we had to tamp down the market. They did it again. But this time, you guys aren't going to believe this. This time, Jeffrey Christian came out and said basically exactly what Ted Butler has been claiming for the last 40 years, that the silver price is rigged by the commercials. He said it while he was trying to explain why it wasn't rigged. But he absolutely 100% admitted that the commercials are rigging the price of silver because there's no other people to sell silver to the retail customers. You don't think he said it? I'm going to play for you what he wrote. And the only reason he's talking about this stuff, he's been talking about it for a couple of days, the rigging. Oh, these people don't know what they're talking about. The JP Morgan case was nothing. Really? What world do you live in? Anyway, check out what this is just, I'm going to play it and pause a couple times. It's about 4 minutes of a rant on why we, people who believe in silver rigging as a conspiracy are full of shit. This guy irks me, but I'm going to maintain myself. Here we go.
A couple of recent videos have discussed one problem that some investors have, in that they're constantly looking to find information that confirms their beliefs in conspiracies and market manipulation. And in doing that, they look at the wrong data, they interpret data incorrectly, and they jump to conclusions. The problem is compounded for these investors because there are chronically wrong promoters who also misuse data. So you'll have people out there who have been talking about the collapse of the inevitable, almost immediate collapse of the Treasury market since 1981. You have other people who have been talking about conspiracies and manipulation in the silver and gold markets since the late 80s and the late 90s.
That's basically Ted Butler. He hates Ted Butler, and his job is to say everything he can against Ted Butler. It's kind of sad that he does that, but Ted's literally the only one out there back in the early days. Now everybody knows about silver conspiracies, silver manipulation, other than Jeff. I keep saying Jeff Curry. Jeff Curry was the Goldman Sachs guy. Jeff Christian is the CPM Group, the supposedly analysis place. But let's go. Let's keep going.
They've been wrong, and they misuse data, and they provide the confirmation for those people who want to find conspiracies and market manipulation. So we talked about this in the October 27th video. We talked a little bit about it earlier this week. And the thing that I said and wrote was that if you look at the questions that people ask, they're asking the wrong questions. And that tells you more about their biases and their lack of understanding of the markets and financial markets than it does about whatever the question is. So 2 days ago, November 1st, we received this comment on our October 31st video. If there's no manipulation, why did have swap dealers put on more than 50,000 short gold contracts in the past few days? Why would a bullion bank do that?
That's a valid question. Why would not only a bullion bank, but a concentrated, very important, concentrated set group of bullion banks, and it's all in the COT data. It's less than 8 that are doing this. Why would a concentrated amount of commercials go against what all these investors, there's plenty of reasons to invest in gold right now.
Why would they hammer the gold price now? The question tells you the person is looking at the market backward. What the proper question is, what caused investors to put on more than 50,000 long gold contracts in the past few days. See, brokers and traders, commercials, basically are responding to their clients. And their clients are industrial companies that produce or use commodities and investors, mostly investors in the futures and options market. Brokers and traders don't necessarily go around putting on long or short positions on their own account in a naked way.
Oh my God. What he's describing is exactly what Ted Butler has been saying forever, that these brokers and commercials are putting on naked shorts to stop their own customers from gaining with the rising price. These customers, 50,000 longs, he's like, yeah, he's saying that the commercials are putting the shorts on to stop the rise in price. And if they're market makers, they're supposed to go out and find a short. You got a long bet coming in, you find the nearest short, right? Because there's got to be a long and a short. So you should, rise up the price. If there's not a short at that price that someone's buying at, you go up to the next one and the next one and the next one. You don't take the short side yourself unless there's an emergency, unless there's no other shorts. And that's what he's explaining.
What has happened, and I'll show you a chart here, is that the trades originate with the investors. And the proper question is, what caused investors to put on more than 50,000 long gold contracts in the past few days? Once you understand and have the right question, the answer is obvious. And here you can see the increase in open interest on gold contracts, and it's really actually been several weeks. You have to go back to, say, the middle of July, when you could see that you had about 42 million ounces or 43 million ounces of total open interest, and it has risen to about 48 or 49. So you have seen open interest rise. But again, you have to understand why that's rising. It's rising because investors bought 5 million ounces of gold futures and options during that period of time. And if you can't answer that question yourself, why did investors buy 5 million ounces of silver futures and options over the last couple of weeks? You haven't been watching the news, or you've been watching the news on the wrong channel.
So, yeah, people are buying gold because they think the price is going to go up. And what Jeff tells you right here, he's coming up to the big hallelujah. He's saying that the commercials, because there are no other shorts, anybody willing to take the short, the actual market makers have to take the short. Well, that's not how a free market works. You should, as the people buy, the price is supposed to go up. You don't sit there and take the short and you load up on shorts so the price doesn't go up to fulfill your customers buying gold to realize an increase in price. What he's saying is the brokers and dealers who are their customers have to take the other side of that trade. That is the most ridiculous thing I've ever heard in my life. They're going actually against their customers' wishes. They're holding the price of gold down. Just listen to what he says.
I won't go through it all. I'll just talk about the Hamas attack on Israel and the Israeli counterattack on Gaza. I'll talk about strong economic conditions. I'll talk about ongoing political problems, the ongoing war in Ukraine, which has been overlooked by the Middle Eastern crisis. You saw oil prices rise, and then they came back down. You have seen relatively strong still inflation. It's coming down, but it is still strong.
So he's explaining why the retail customers are buying, right? And listen to what he says happens. This is just insane. Listen to this.
There are any number of factors that cause investors to buy 5 million ounces of gold futures and options over the last few weeks. And the brokers and dealers, when an investor buys a futures contract, a commercial has to go short that contract. That contract doesn't exist until the investor says, I want to be long gold.
What? What did he just say? Let's listen to that again.
The brokers and dealers, when an investor buys a futures contract, a commercial has to go short that contract. That contract doesn't exist until the investor says, I want to be long gold.
The commercials don't have to go short any contracts. This is supposed to be a free market. It's not one side against the other. He says they're doing it for their customers too. Listen to this.
And then a commercial entity has to step up and say, in my role as a market maker, I will sell you that gold contract. They're the passive agents. If you want to know what's going on in the gold market or the silver market or any other commodity market or any other financial market, you have to focus on the investors. That's where the decisions are made.
So, just so it's clear, what Jeff Christian is saying is everybody and their mother is the investors, the retail side, is the reason that 50,000 contracts went into gold over the past few weeks. And the only person to take the short side, because someone has to take a short. If there's a long, there's got to be a short. Because there are no other shorts, nobody else in the market, the commercial, the market makers have to take that short. That is completely against free market. What should happen is the price should rise until someone in the free market takes the short position. It gets so high that people come in. A free market is like that. You don't just sit there and say, oh, my customer's going long, so I, as the commercial, I'm taking the short. Because there are no other shorts out there. They're the last short. Jeff Christian just explained market manipulation to us the way Ted Butler has done with his numbers. A concentrated amount of commercial short sellers are playing against their customer's book. As soon as their customer wants to go long, for gold, for all those great reasons, he's saying the commercial market makers have to go short because there's no other shorts out there. It would rise the price 20, 30, 40% to find enough shorts to cover the longs. That's the whole crux of market manipulation. Thank you, Jeffrey Christian, for explaining market manipulation to everybody in a very, very simple manner. Let's hear it one more time. Oh, they got a commercial on me.
For us, there is no calm.
This is very easy. This is the guts of market manipulation. I'll show you when Jeff Curry said pretty much the same thing. Got quite a few ads here. Jeff Curry said pretty much the exact same thing during the silver squeeze of 2021. Now listen to what Jeff says. Jeff Christian.
I want to be long gold. And then a commercial entity has to step up and say, in my role as a market maker, I will sell you that gold contract. They're the passive agents.
Now, how is that a passive agent? How is a market maker who clearly has no other place to put this long? He's got nobody out there in his book. Market maker is supposed to balance the book. And if there's no buyers, yeah, on occasion they take the hit. But what Jeff is saying, that there are no more people who want to go short. It's only the commercial, only the market maker. All these people are coming in to buy gold for the right reasons. And Jeff says, oh, yeah. And then the commercials sell it. Why is the commercial selling it? Because there are no other people willing to go short gold at this price. And it's even massively more in silver, and it's shown in the COT data. This is exactly what everybody's been screaming about. Jeffrey Christian wouldn't know manipulation if it smacked him in the face. He just once again gave up the ghost.
If you want to know what's going on in the gold market or the silver market or any other commodity market or any other financial market, you have to focus on the investors. That's where the decisions are made. So the question to our friend is not why they would, bullion banks go short 50,000 contracts. To answer that question is very easy. They went short 50,000 short gold contracts because their clients, the investors, went long 50,000 gold contracts.
If you have a broker who's going to short your long every time you go long on something, would you fire that broker in like 30 seconds? Of course you would. We're looking for a free market here. Willing buyer, willing seller. We're not looking for commercial market makers who take shorts because there is no other short at this price.
If you ask the right question, and if you understand the markets, there ain't no manipulation, there ain't no conspiracy.
The world's dumbest human, Jeffrey Christian, wins once again. Now, I do want to go back to this. This was Jeff Curry in February of 2001, right when the squeeze was happening in silver. He admits something that is just, now this is from my own post, but he admits something on the halftime report, CNBC. Check out what he admits here.
Guess whether he's short or long. Guess whether Goldman Sachs, an authorized participant in SLV, is short or long. And why should they be short or long? I'll get to that in a second, but check out what else he says. He just gives up the ghost. He tells you exactly what they do.
I guess my question is, forget the ETF. In terms of thinking about how are you going to create a squeeze, the shorts are the ETFs. The ETFs buy the physical, they turn around and they sell on the COMEX.
There it is. They buy the physical and they short on the COMEX. Wait a minute. The ETFs, authorized participants, buy the physical to put into the ETF. So they have no say. Once that authorized participant puts the silver into the ETF, they no longer own it. That is, the ownership goes to the shareholders of SLV. So Jeff Christian says no. They're not only are they buying the silver, which would rise the price, they're putting it into the ETF, and then they're shorting it, but they can't. That's a completely naked short. These people are so criminal. All you people like going, oh, I can't wait for the Bitcoin ETF to come out. Don't do it. Don't do it. Bitcoin is a standalone asset. Don't let them play the same games with cryptos that they play in the old system. This is fraud. This is manipulation. Thank you, Jeff Curry, for telling us that. Oh, by the way, you see what happened last August? Goldman Sachs' Jeff Curry, who predicted the commodity supercycle, is to retire. Goldman Sachs' global head of commodities research, Jeff Curry, a prominent analyst who accurately predicted a surge in commodity prices in the 2000s, is retiring, according to a memo seen by Reuters. Curry is leaving after 27 years. His departure is the latest high-profile exit from a Wall Street giant. The reality is bankers don't quit when things are going well. Bankers quit right before the shit blows up. I think 100% Jeffrey Christian is correct that there are no other buyers besides the market makers. That means there's only one side of this trade of people buying gold, and the only people selling, as we can see from the numbers, especially silver, are the commercials. And we've seen it. Ted Butler has known it for 40 years now. And thank you, Jeffrey Christian, for finally admitting that the commercials have no other reason to sell short against the incoming flow of new orders other than to rig the price. Because there are no other people willing to sell short. Who would in their right mind? Jeff Christian, bravo. You've done it again. You guys, everybody send this to the CFTC, to everybody out there in silver. Jeff Christian is a hero. He is a hero to the silver investor. Listen to the whole interview if you want. Start asking the right questions. My right questions to Jeffrey Christian is, how stupid are you, my friend? How stupid are you? This is Bix. I'll talk to you later.